Okay, we're going to go ahead and get started. Thank you for joining our home buying webinar today, sponsored by Provident Credit Union. Our session today should take about an hour with a Q&A session at the end of today's meeting. Throughout the meeting, you could enter any questions using the chat or questions pane, and we will address all of them at the end of today's webinar. Our first presenter is Mo Sangabi. Mo, would you like to introduce yourself?
Great. Yes. Hello, good afternoon, everyone. My name is Mo Sangabi. I'm Senior Mortgage Consultant with Provident Credit Union. And I've been with the credit union for the past 25 years and overall 30 years in the business. I specialize in first-time home buyers, assisting them with the pre-approval and the steps, to finding their home, basically getting pre-approval and the next steps, which we're going to talk about today. We're going to also discuss the process of not just the pre-approval, but also the interest rates, adjustable rate mortgages, and what makes sense at this time at the current market. And we'll take the next step. Once we go through this webinar, if you decided to proceed with the pre-approval, please contact me. My contact is at the end of the webinar slide, and you can email me or call me, and we'll be glad to meet with you in person or via Zoom or on the phone, take care of the initial consultation, and then we'll move on to the pre-approval. We find that's very important to get this step done before you start searching for your home, to find what your buying power is, what you qualify for, the things to do and not to do. So that's going to be important. That's a part of my job, to assisting you with that. Today, we also have Michael Mendenhall. Michael is one of our preferred broker, assisting Provident Credit Union members in the past 25 years, doing live seminars as well as webinars. And Michael has been in the business for 45 years, and he has assisted our members for a long time. And our members tell us attending these webinars, they understand the home buying process much easier and moving on to their search for their new home. I'm going to let Michael introduce himself as well.
Hi, everyone. This is Mike Mendenhall. I've been working in the Bay Area for 45 years, and I'm very honored to have been brought in by Provident to cover the real estate portion of today's webinar, and thank you for attending.
And here are some additional consultants here at Provident.
All right. Basically, why choose Provident Credit Union? Provident Credit Union is one of the largest credit union in the country. And basically, we are headquartered out of Bay Area. Most of our 21 branches are in the Bay Area, with the farthest one being in Folsom. And basically, we got a lot of companies that we have as SEG, that we have partnership with, that they get rate discounts. And the credit union is basically very safe and sound, with $3.5 billion in assets, and pretty safe and sound. But, next, please. Provident Credit Union basically insures up to $250,000 for IRAs, savings, and other things. And also, we have been running for over about 5 years, basically as the best credit union in the region. And basically, recently, just a few months ago, we were named America's Best Credit Union. So with that, we're going to go ahead and get started. All right, Mike.
Yes. Our goal today: assist you in understanding mortgage financing options, help you define your ownership objectives and how to achieve them. If you could leave here today with that, that would be fantastic. Demonstrate how you can buy a home for the best price with the most favorable terms. 2 parts to every purchase agreement: price and terms. We'll cover that. Help you understand what to expect when your offer is accepted, or the escrow process. Okay? Okay, and here's the actual stepping stones we'll be going through today. First one is educating yourself about home buying. I applaud everyone that's here and getting useful information. If you would like additional information about the geographic areas you're purchasing in, please do send me an email and I'll recommend a book that you can get that would help you in that area. Mo is going to walk through the application and obtaining of a full pre-approval today, which is so easy because Mo is the best. We're going to summarize all those costs associated with purchasing homes. Just like when you bought a new car, there's the price of the car, then there's all those associated tax and fees that go along with it. We're going to talk about what a professional real estate agent does for you during the transaction, because that's usually a mystery to a lot of people. Building your home search, or how to build an effective home search filter that will educate you to the different markets. We'll talk about that. Finding the home, two parts to finding the home. First part is the actual value of the property. We'll talk about how we determine value. Second part is understanding the condition. And that means those roof inspections, pest inspections, property inspections. Lastly, we'll walk you through how easy it is to make an offer and how the process moves forward. Okay? Okay, Mo.
All right. So basically, there are quite a lot of tasks from the time that you're attending this webinar until you find your home and close on your escrow. Basically, what our job is to prepare you and know what to expect and what the requirements are for underwriting who approves your loan. So preparing you for the financials, basically there are three parts to your assets. We need money for the down payment. You also need to have some money for the closing costs. And then we also need to have some reserves. Now the reserve says 2 months here, but this can change depending on the loan amount. If the loan amount is over $1 million, then it's going to require basically 9 months of reserves. And what that reserve means is basically taking the payment, the monthly property tax, and monthly home insurance, and we multiply that by 9 months. Now, if the loan amount is below $1 million, it's 6 months, and if it's below 800,000, then it's 2 months of reserves. So basically, our timeline is typically a standard purchase contract. When you get into a contract, when you're writing up the offer, is usually 30 days. But these days, it has become more common for the offers going at 21 days. And Provident Credit Union can easily do that in 21 days. But we also have this power funding program, which is 10 business days, which is basically 2 weeks. We can close that transaction. So if you find a house and you want to have a competitive offer, Provident Credit Union can close your transactions in 2 weeks. So the first step is basically to get pre-approved. And what we do is not so much what the highest you can qualify for, we'll do that for you. But we also share what the payment is. I will be sending you a payment Excel. So let's say you qualify for $1 million home and you want to put 20% down payment. We'll give you the different products that are available, fixed rates, adjustable rates, what the payments are, and have you take a look at your budget and see what you like, what your payment is going to look like, because we're going to let you know what your maximum buying power is, but you also have to look at the payment for yourself if you have other things that you want to do, like dining out, vacations, and that type of things. You want to budget into this in order to go for that. Next, please. All right, the pre-approval process, that's pretty easy, and we appreciate you attending this webinar today, because post this webinar, what we need to do is basically, before you start searching, we need to get you pre-approved. And pre-approval through the credit union is not just something verbal or email. We actually are going to go through the application process, running your credit report, and verifying some information. There are 4 parts to pre-approval. There is income, credit, debit, and also the assets. And these are all equally as important. As far as the income goes, if the attendees today are basically, if you're a salaried employee, it's pretty easy. We need the W-2s for the past 2 years. That would be 2023, 24, and also 2 recent paycheck stubs. Now, there are some people that they have bonuses or commissions or RSUs, the stocks, as income. For those, we also need the year-end paycheck stubs because that will give us the breakdown of the base salary, the bonus, and any RSUs that you may be receiving, because that can be used as income, and that will bring your buying power up. So basically, 2 years now. If you have switch jobs, that's okay, but you still need to verify the W-2s, but they can use your current income. Now, in order to use that bonus or RSU income, you need to be with the company for the past 2 years, or at least close to that. If it's less than 2 years, basically they just use the base salary, unless you have a history of making the RSUs and bonus income with the prior employment. If you are self-employed, then we need the past 2 years tax returns. So that would be 2023 and 24, and we use the net income on the tax returns to qualify you and average that over 24 months. When we're using the salaried employee, we're using the gross income. But when it's self-employed, we use the net income. But we'll talk more about that specifically once you reach out for the pre-approval. As far as the credit goes, our recommendation is to not open any new accounts or close accounts. And basically what we do is we run the credit report. We'll make recommendations. If you have limited credit, then in some cases we may ask you to open a new account so you have more trade lines. But typically opening new accounts, it has an inquiry, and because the account is new, that could hurt your credit score. Same thing with the closing the accounts. If you close accounts to get ready to purchase the home, some people make that mistake and close their accounts, and then your available credit goes away. That also could hurt your credit score as well. So please do not do anything until when we do the pre-approval. And if everything is fine, we just leave it at that. But you don't want to open accounts or close any accounts. If we see anything out of ordinary, like late payments or tax liens, we'll let you know about that, so we can take care of that in advance of putting an offer in, because basically we do have a minimum credit score of, in some cases, 680, but most of our products require 720 credit score. Now, when we run the credit report, it's actually good for 120 days, which means that we are going to give you the pre-approval, and then if you find the house within 90 days and close within 30 days after that, we're in good shape. We don't need to run the credit report again. However, if you go beyond that 120 days, let's say you apply now and you find a property in November of this year, which is beyond the 120 days, then only at that time, once you're in contract, we're going to run the credit report at that time again. But so that's basically, the credit report is important to run it initially to just make sure we're on the right track. As far as the other debts goes, credit cards, auto loans, student loans, we use the minimum payment to qualify you. So when we are qualifying you, there are two sets of ratios, basically. We call them the housing ratios, and then also the overall debt to income ratios. The housing ratios are basically your housing payment, which is the principal and interest, monthly property tax and monthly insurance, and monthly PMI, private mortgage insurance. We'll touch base on that shortly. And then if you have other monthly obligations, we add the minimum auto payment or credit cards or student loans into the housing payment, and then we divide that into your gross monthly income. That gives us the overall debt to income ratios. What we're looking at about 42, 43% maximum debt to income ratios, and that tells us that you're comfortable in purchasing a house. If you start going above that, that's kind of pushing things, and we'll let you know about that, what the maximum caps are. So if the auto loans is less than 10 months payment, we're not going to calculate that into calculation of debt to income ratio. So let's say you want to purchase property for $900,000, but you only qualify for $800,000. What we may require, ask you to do is just pay it down to less than 10 months. So we don't use that payment in the calculation of debt to income ratios in order for you to qualify for the higher amount. but everybody has a specific needs and everything. And when we do the pre-approval, we'll discuss those options with you. As far as the assets goes, basically the source of funds is basically needs to be verified through 60 days of the bank statement. Acceptable forms are savings, checking, stocks, bonds, 401k. As some people, they have the money already. And for the reserves that we just talked about, we needed the down payment, closing cost, and reserves. The 401k, you don't need to touch that. We just basically need to verify that. And we can use 70% of the account value as reserves. So that's going to be important also to verify all the assets, stocks, because that's going to help your qualification. If you are getting money from overseas or gift funds, you want to make sure kind of to bring that money over now. Because once you get into contract, if you're closing in 21 days or in 2 weeks, there's not going to be enough time to get that verified and have the money being over. Because some of the real estate agents now these days, what they do is they want a verification of funds. And it's good to have it in your bank account ready to go. And again, 401k, we just use it as reserve, but I've seen some people also, if they're short of down payment, they take a 401k loan. But we recommend for you to talk to your advisor at the financial company that you have your 401k to see if that's a right approach for you. Next. All right, so the things you don't want to do is basically, once we do the pre-approval until you get into contract, there are some things that you don't want to do. You don't want to buy car or open new accounts, and also co-signing for somebody. Now, if you have already co-signed for somebody is over 12 months and they've been making the payments out of their accounts, then we just need 12 months history to show that they have been making payments. But if it's a joint account, they're going to use that payment in the calculation of debt to income ratios because they don't have a track history of the other person making the payment. So co-signing is not really a good idea when you're purchasing a home. You want to make sure all your payments are paid on time and keep your credit cards, if you can, below 50% of the account value. If, for example, you got $10,000 credit line, you want to keep the balance below 5,000. The higher that you go on the balances, that's going to also hurt your credit and bring your credit scores down. If we do the pre-approval and then you change jobs, just please let us know. It's perfectly fine to do that. But before you do that, just let us know so we can calculate the numbers, because we may have used your bonus or your stocks or the commissions to qualify you. And if you're getting a new job, then we may not be able to use that additional income. It will be just a base salary. So we want to discuss that to make sure that you're still qualified. And one of the biggest things is also what you don't want to do is move money around. If you got like 2, 3, 4 accounts, that's not a big deal. You could consolidate as long as we can get the proper paper trail. But I've seen some people have like 10, 15 accounts and they have small balances and they keep moving around. When it gets to underwriting, they need the paper trail. So they're going to ask you to verify anything really above $3,000 is considered large deposit. And if it's a non-payroll, then basically they want to know where the money came from. They just want to make sure it's not borrowed funds. Next. All right, then we talked about the source of funds. It could be your own money. It could be gift funds, savings, bonds, and then you also touch base on the overseas accounts that basically you want to make sure you get that over here in advance. Same thing with the gift funds. If somebody is gifting you, you want to make sure when you're getting into contract, they're available to transfer the funds to your account. Next. All right, the type of mortgages. For the pre-approval, we're going to discuss a variety of different products. Fixed rates are always great historically, when it, because it does not change. It gives you peace of mind that it never changes. However, what has happened in the past 2, 3 years, the rates have been rapidly going up. But now they're starting to come back down. That's the good news. And a lot of people, our members, are taking adjustable rate mortgages. These are the same term, like a 30-year, same as a fixed rate. However, they're fixed for a period of time. We call it 5-5, which is adjusted every 5 years. That's our best product right now. We're at 6.125 on the adjustable loan versus on the fixed rate at 6.875%. And in the environment that we're expecting lower interest rate in the near future, over the next 12 to 18 months, this adjustable rate mortgage is going to help you having a lower closing cost, as you know, lower closing cost and also lower interest rate. And then once the rates come down, you're going to have a couple of options. Provident Credit Union has this option of a streamlined refinance, which is basically paperless refinance. We don't need any documents from you. We know there's a flat fee of $3,000. We give you the new interest rate and extend it for another 5 years. For example, if you're at 6.125 today and we end up 12 months from now at 5%, you simply collect the $3,000. It can be added to your loan balance or paid separately, and then we'll extend that for another 5 years. This is our most popular product right now. We offer that on 30-year amortization as well as 40-year amortization. The 40-year amortization has helped some of our members qualify for a higher dollar amount, while they normally would have not. So we'll share both options for you and discuss any questions that you may have. Again, fixed rates are good. If that's something you want to go with and then refinance it down the road, once the rates come down, you can take a fixed rate. But our recommendation is currently the 5-year adjustable loan, and then basically either modify it or you could refinance into a 30-year fixed at a later time. Next. Rate locking, basically when we're pre-approving you, we're using the current interest rate. However, your rate is not going to be locked until you're actually in purchase contract. So we start now, once you get into contract, if you're taking a fixed rate, it's a 30-day rate lock. If you're taking the adjustable loan, that's an in-house portfolio loan, that's 60 days rate lock. But on the adjustable loan, basically you're able to get a lower interest rate should the rates go down during the process. There is a one-time float down of the interest rate, but if you get the fixed rate and you wanted to lock that, that is your final interest rate during those 30 days until you close. Next, please. Monthly payments, basically, the monthly payments is principal and interest, which, as I mentioned, will provide you a payment Excel where it allows you to change the purchase price. And based on your down payment, whether it's 5% down, 10% down, 20% down, you're able, we can give you that payment Excel, and all you have to do is just put the purchase price and everything will calculate for you, and it would include the breakdown of the loan principal and interest, as well as monthly property taxes, and monthly insurance. Some people, they prefer to include all of this into their monthly payment, and that's known as impound account or escrow account, which is all bundled in together and makes it easier for you, and you don't have to worry about making that payment because it's a part of your monthly payment, and you'll be making that payment every month. You could, if you're putting more than 10% down, it's optional. You may select to either include that, your monthly payment, or pay that separately, the property tax and insurance separately yourself. The property taxes are due twice a year, and the home insurance once a year. So you could make that decision whether you like to include it on a monthly basis or pay that separately. Next, please. All right, Michael.
Yes, thank you, Mo. And again, everyone, keep in mind that you do need your pre-approval first before you meet with a real estate professional. Otherwise, a real estate professional will not know how to assist you. So in our example here of closing costs, this is a buyer's estimated closing costs. I'm going to point out first that we in California do what's called customary closing costs, which means county to county, city to city. What might be a buyer's fee in one city is a seller's fee in the next. Same with the county. So you really need to know where you're purchasing. So this is kind of a fictitious purchase, if you will. Sales price of 1 million, mortgage of 800,000. They're putting 20% down. Loan application fee is 0. Thank you, Mo. Lender fee flat 995. That is very low. Loan origination fee points, you may want to pay points to buy down your rate. And 1 point is 1% of your mortgage amount. It might be less than that, it might be more than that. That's a discussion to have with Mo. Tax service fee to make sure your taxes are paid on time, $119. Credit report, $55 per person. Appraisal fee, roughly $700 for a licensed third-party appraiser to go out to the property, make sure it's worth what you're paying for it. And it could be more or less depending on the size of the house. Hazard fire insurance. I'm going to say we're in a pretty safe non-fire zone there because we're getting $1,000 a year. Always check with your insurance broker before you make an offer. Private mortgage insurance, Mo already covered. Impound accounts, Mo already covered. And I agree with Mo, impound accounts are awesome. You know, why make those payments to different people throughout the year? There's two one-time insurance policies, CLTA buyer's policy and an ALTA lender's policy. These are two one-time insurance costs to insure the title of the property so that your title is clean. It's not clouded. Clouded means something rears its ugly head and maybe someone says they had interest in the property or loaned the people money with the house as collateral, something like that. And so you're insured for that. Escrow fees, $1,200, and that's based on the sales price of the home. That's for the title and escrow company to handle the paperwork. Recording notary fees, $300. Inspections that most people will obtain, termite, roof, and property. $250 for the termite is usually about where it's at. Roof inspection is about $250. Property inspection could be $550 to $1,000, depending on the size of the home. Miscellaneous charges, city transfer tax, $1,650, county transfer tax, $1,100, prepaid interest, because you might be closing during the month. And we use a 30-day month to calculate. So you might close on the 15th day, 15 days remaining in the month. You're going to have that interest add up for those 15 remaining days. Gives us $12,701 for closing costs. And if you would like to know who pays what in the city or counties where you're purchasing, you can send an email to Mo or to myself, and we'll be happy to point it out to you. Okay. All right. So when I sit down with home buyers, the first thing I ask them is the number of years they're going to occupy a home. If they tell me 5, I'll write 5 at the top of my little cheat sheet here. And then I'll go through the questions. You can see the questions are on the left. The first one is bedrooms. And then we have require, desire, neutral, and don't want. So I might say, how many bedrooms do you require for the 5 years that you're going to live there? And they say, oh, 3. The desire, we'd like 4. Neutral, 5. We probably wouldn't use it. Don't want for sure. Maybe they don't want, over 6 bedrooms, something like that, a negative search. And we go through every part of the home, bedrooms, baths, separate family room, separate dining room, garage, carport. Appliances and systems. This is where I usually get bogged down in the discussion because everybody loves their kitchen. Somebody might like to bake and like a lot of counter space. Other people might want an oversized freezer, refrigerator. Kitchens are personalized. So that's something where we may have a lot more to talk about as we go through it. Heating and air conditioning. How is it heated? How is it cooled? People have allergies. There's some that know what systems they don't do well in. So that's a discussion to have. And are you going to be on sewer, septic, or are you connected to the city? Really, really, really important. And people think that there's only septic tanks out in the country. It's not true. It's in the very cities that you live in. Older homes, a lot of them are still on septic. That's a discussion to have. Washer dryer is a big one, especially if you're buying a condo or a townhome. Does it have one? Is it in the unit or is it coin-op public? Or how about it doesn't have one? Can you add one? Again, discussions to have with your real estate professional so we can build a home search that automatically comes to you with all the features you're looking for. Next, please. Okay, on this one at the very top, we have roof inspection. If we're doing a single family home and you're going to live there for 5 years, you'd probably require at least 10 years left on it. You desire more than that. Don't want would be one that's only 5 years remaining because then you're going to put a roof on for $30,000 to $50,000 just to sell the home. So important to understand the condition of the property. That doesn't just apply to the roof. That would be the pest and property inspection as well. And then there's also the aesthetics, type of siding, stucco, wood, brick, stone, fenced yard. How big are you going to want, a basketball court in the backyard or just enough to entertain? Frontages, how much grass do you want out front, greenscape and so forth. Pool, I put a pool in there simply because when I first started in the business 45 years ago, everybody wanted a pool. Now, pretty much nobody wants a pool. There's a lot of reasons for that. There's droughts, there's insurance, there's small children. It goes on and on and on. If you want to obtain a good price on a home, include pools in your property search. Don't say no pool. I sell houses every year that the backyard is entirely a pool, and then we get such a good price on it, and sometimes we're the only offer, and then we pull the pool out. That's a discussion to have with your real estate professional when you are at the property, because depending on how the pool's built, it can be different prices for taking it out. Anything you want to know about the neighborhood, architectural style that you're looking for, price ranges, homeowners associations, we're here to discuss all that. Commuting times, I like to find out where people work, where they go to school, if they have children, where the kids will go to school, where do you worship, where are your relatives, and essentially where do you go throughout a week. And then I try and find a place that's best for commuting. Okay. All right, types of homes that come up on the multiple listing service. The first one is single family home, shares no common wall, generally includes front and rear yards, not always anymore, but most properties do. Owner is responsible for the maintenance or property inside and out. Owner pays all insurance costs. So essentially, you're the foreman of the ranch, and you're there to fix, repair, upgrade everything. And if you cannot do it, it means you're going to pay somebody to do it. So nothing is covered in a single family home. You've got to be the one that takes responsibility. Unlike townhomes and condos are called common interest developments. They share common walls, monthly homeowner association fee. The HOA fee covers exterior grounds and building maintenance, and also generally covers the master insurance coverage. That means if there was to be, a fire, a flood, something, the building will be rebuilt. And lastly, the financial health of the HOA. If I can obtain the HOA financials before I show a property, I will go through them quickly and determine whether or not that this HOA is in financial hardship. If it is, I will steer all my clients away from the property. Really important that you get a strong HOA financially. Okay? All right, inventory in the multiple listing service. Okay, where does it come from? Top left, foreclosures. That's just a property that someone's not made the payments on for whatever reason, and the lender is going to foreclose and take back. There's a huge myth out there that foreclosures are great deals. That is a myth. They're just a property for sale that's been taken back. Sometimes it's a good deal, other times it's not a good deal. It's just like any other property. The name foreclosure itself does not mean great deal. To the right, probates, anything to do with the legal system of the state of California, death, divorce, partnership, breaking up, whatever the case may be. If it's a probate or a foreclosure, make sure you have a very experienced agent, because both foreclosures and probates can be very involved. Bottom left, corporate transfer. Corporations usually transfer by promotion between September and December of the year, September through December. I love corporate transfers because generally when people are being transferred, they're people that are making good money, they've been promoted, and they've used that money to upgrade their 60 to 70-year-old ranch style home here in the Bay Area, and not thinking they were moving. And so if you can find one of those during those time periods, a lot of times they're in super good condition. They've been upgraded. The people had no thought that they were going to move. Again, September through December. Conventional listings, that's just anybody moving up, down, or sideways because the family's getting bigger, smaller, job change, whatever. Okay. All right, the email home tour is up and running. It comes to you 24 hours a day, 7 days a week. You can review it. Once you click on it, we on this end, the real estate professional, will say, you like that property, and we'll do some more research. The down and dirty is the top right corner here. It just gives you the basics. 3 bedroom, 1 bath, 1,200 square feet, 5,000 square foot lot, and it's 71 years old. Okay. We don't trust that. We kind of, thumbnail, say, okay, that's what it sounds like, but we'll research it further. If you're going to make an offer, we're going to pull some records and make sure that's all correct. But if you like it, we'll schedule a time to go view. And behind the first photo here will be more photos of the house. Okay. All right. So when you read the listing comments, you got to be cautious of some of these. Here are some buzzwords that are in a lot of the listing comments that I tell you to be wary of. On the left, all the property needs is a little TLC. That usually means it needs to be bulldozed. It's a tendency to believe that all it needs is some carpeting or some paint. Not usually the case. Great for first-time home buyer or investor, contractor special, fixer upper. These 99% of the time are all, I'm sorry, the bottom two, contractor special, fixer upper, are all cash. The reason for that is they don't pass health and safety certification. Lenders are going to shy away from those. So you want to be really careful on those too, unless you have all cash. Sorry, the second one, great for first-time home buyer investor, that appeals to two different people in the same way. A first-time home buyer might look at a 65-year-old home that's dated but in good shape and say, hey, I'll update this over time and make some money. Good plan, it works. Or the investor will buy it, but the investor will just rent it in its current condition for the next 10 years, then rehab the property and sell it. Both have the same goals, both of them have a different approach. On the right, look for recently remodeled, new, renovated, move-in condition if you want a property that you don't have to do anything to. Most times they are exactly what they're telling you. They've been completely updated. That's awesome. It could be 60 years old, but now it's like a new home. So those are out there. Obviously, those are going to command a little bit more money. Okay? All right, when you're ready to buy. Now, ready to buy is interesting. Let's go back over what we've learned. That means that you've built this home search, the home search is up and running, and let's say you've picked 5 different cities. You got a big search. You've been out there looking in these different cities. The reason this software is so great is it's educational. You're going to learn what comes up in the search based on your requirements might be one price in one city and a completely different price point in another city. You slowly start to change features. So let's say you found a city you really like, but you're not finding homes in your price range. And I might suggest something like, well, if we took out a family room as a requirement, maybe more will pop in. So then we start to learn what you can get for your comfort price zone in every city. So that's been accomplished. Now here you are. You've learned where you want to buy, what you want to buy, and the price point, and so it changes. What changes? You got to look at homes 24 hours a day, 7 days a week, which is a little bit of an exaggeration. But what I'm saying here is you've really got to take it on as a second job, getting out there during the week, not just the weekends, because homes do sell during the week. So you want to view the listings ASAP. People are starting to stay in their home now, which was changed during COVID. Nobody stayed in their home. Most properties today still find vacant. But if the owners are living there, go out of your way to meet the owners. That means not at an open house because they're not going to be there. It means your agent making an appointment at a time when they'll be there so you can catch them, meet them, and introduce yourself. Really important. When a seller meets a potential buyer, they will remember you. So when they see your name on a purchase agreement, they're going to have an affinity to maybe go with you. Be prepared to remove your shoes before entering a home. Almost everybody requires it now. I am not a big fan of the booties, so I recommend getting some slip-on shoes and buy yourself a bunch of socks from Costco because you're going to put holes in them. Do not bring a crowd when viewing. Okay, when you're there viewing, this is really important that you and only essential family members, if any, come with you. Reason is you do not want to dilute this experience of looking at the home with your real estate professional by bringing a lot of family, friends, and coworkers. Do them at another time unless they're very important to the purchase. Okay? Okay, when you're inside the home, don't make negative comments about the home you're viewing. Just assume that every home has a camera, because most of them do. And somebody's sitting at a computer somewhere when you come in. If you're going to like this home because it has things that you want to change, don't mention it on camera. By that, I mean, don't walk into a kitchen and say, oh, I just would like to knock this wall down, redo the kitchen, blah, blah, blah. That's positive on your part. You're saying you like the house and this is what you would like to do to it. Sellers don't hear it that way. If you're going to want to make any changes, ask your professional real estate agent away from the house about changes, what will they cost, and so forth. Again, don't bring a crowd when viewing homes. Don't use the bathroom in any home you're viewing. Just a heads up, we're not supposed to use the bathrooms, okay? And people do take offense to it when somebody does use their bathroom. And just assume that every vacant home you're in, the water has been shut off, because in most cases they do. So just, shop accordingly, hit a Starbucks to use the facilities, okay? All right, take a second look. If you find a property that you really like, I want you to walk back through the home very slowly. This is just a short list of, I already have it memorized. It's like 3 times as long as this. I walk my people back through the property slowly if they indicate great interest in the home. I want to open, close, turn on and off, look inside ovens, dishwashers, open cabinets, really take a solid look at the home. The mechanical equipment, AC, heating, water heater. We want to go through closely before you make that offer. Okay, so that's called take a second look. Okay. All right, comparative market analysis. How do we determine value? We do this by going back in the neighborhood 100 days. I have 90 here, but I'm going 100 nowadays because there's fewer sales. Looking for houses of similar square footage, similar schools, if not the same schools if possible, same number of bedrooms, bathrooms. Really, really important. So all we care about is the sold ones. So if you go to the very bottom, you'll see we have 3 sold. And there's only 1 active. So we must be looking at the one that's active. It's a 3-bedroom, 1-bath, 1,000 square feet. And then down under the solds, we have 3-bedroom, 1-baths, and they're almost all the same square footage. One's 40 square foot bigger, probably a mistake. But behind this is the boring part. You're going to find pictures of those homes inside and out so you can compare the condition to the one you're looking at. And the sold homes create a window of value, and you try and match the property that you're looking at and considering to purchase to the sold properties, finding which one of the sold property or properties it's most similar to. And that'll tell you in that price range, your house should appraise because the appraiser's looking at the same values as you. We can put these together in minutes for you. Okay? All right, California Purchase Agreement. There's 2, the CAR and the PRDS. You want to make sure you have the most recent revision date, a broker review and initials at the bottom on the first page if you're working with a newer agent. And then you're going to talk about contingencies. Do you want an inspection contingency to get something else inspected? Do you need a financing contingency or the appraisal contingency if you want to have that? Now, most of the homes I sell in the last 10 years are sold as is with 0 contingencies. I would say probably that's 95% of the homes I have. So each one of these, you want to talk to your agent about and go through the inspections with them in detail so you know what you're getting into. Because if you're making them with no contingency, that means there's no backing out. Once you put your 3% earnest money down, you're buying that house. So you need to talk about value, the condition, the cost before you say yes or no on contingencies. Okay? Okay, offer process. You and your realtor will decide what to offer, discuss possible contingencies in offer. Your realtor will present the offer. The seller will respond by accepting, rejecting, or countering your offer. You can accept, reject, or counter the seller's response. Real simple process. Okay? All right. It'd be great if everyone could find a brand new, a very experienced agent, but that's not the case. It might be a relative or your friend that got their license. That's fine. Just make sure they're working under the wing of an experienced broker. Make sure that you know their experience, who's overseeing them if they're new, establish goals, determine a strategy, and develop a timeline to achieve your goal. Okay? All right, you're in escrow, and here's all the people that are helping you. And where are you? You're at the top. You are the CEO of the transaction. Okay. And like any good CEO, you have no clue what's going on. So you're deferring to all the people down below you hear. That would be Mo, that'd be a realtor like myself, that'd be their assistants, the transaction team, title and escrow, your insurance people. We're all there to walk you through the average 30-day close of escrow. Okay. And now the work begins. We have a list that we go through every day. I read what I need to send to you. I go through it with you. I get your signature, and we move on to the next day, the next task list. Okay. until we get to the moving day. Well, we just kind of shot Real Estate 101 through a fire hose at you. You might have some questions. We'll be here to answer your questions. So if you have any, please go ahead and send them. Also, if anybody needs a referral to a real estate agent anywhere in the nation, I pay for a service. I have everybody's name and background. Just shoot me an email. Be happy to give you a contact that can help you look for the type of property anywhere in the United States that you're looking for. And of course, before any of this starts, you need to get a pre-approval. Otherwise, your real estate professional cannot assist you. Mr. Mo.
Thanks, Michael. It was great. Yeah, please, if you decided to proceed, Michael has been covering the Bay Area for a long time, and his contact information is there. He has assisted many of our members, and he's a preferred broker to Provident Credit Union, and there is a rate discount for that. And my contact information, of course, is there as well. My email address, direct line. I'm available basically anytime during the business hours, in the evening, and on the weekends. So just let me know if you decide to move with the pre-approval, and we do initial consultation, and then we'll move on with the application and get you pre-approved. And then during that process, I'll take you specifically to what you qualify for, answer your questions, and get you ready for the home buying process.
Doesn't look like there's any questions. If you guys do happen to think of anything, you can always contact Mo or Michael. And also a copy of the slide deck with their contact information will be emailed to everyone in no later than a week from today. So thank you for joining us, and everyone have a good day. Thank you, Michael. Thank you, Mo.
Thank you.
All right, great. Thank you.